Another day, another massive news story coming out of China that has the potential to pump all of our bags to Valhalla and beyond. Also, the debt ceiling theater in the USA has once again come to an end. I want to break down what this means for our bags and of course some critical Bitcoin charts, so do make sure to stick around for those goodies as well. Now let's start at the top with the big story. And look, I know we keep talking about China, I get it. But things are getting pretty damn crazy over there. You see, just days before Hong Kong opens up the floodgates for crypto trading for retail investors, which could bring a lot of mainland money through Hong Kong, we see the Government Tech Committee in Beijing, yes, Beijing, the center of Chinese government, not Hong Kong, their finance hub, they just released a white paper on crypto. Now in this white paper, they talk about NFTs, virtual reality, augmented reality, the metaverse. They also talk about coders like Polkadot's Gavin Wood, for example, and China's major tech companies are also referenced in this paper, ByteDance, JD, Baidu, among others. Furthermore, this paper goes on to say that Beijing is planning a series of key technologies, applications, and platforms around Web3, blockchain, and crypto technology. Big stuff. You see, for better or worse, China is one of the biggest players in the cryptocurrency markets. Chinese people are nuts about crypto. And it's still true today. In spite of an unprecedented crackdown on crypto in 2021, China has utterly failed to suppress crypto domestically. For example, Bitcoin mine 2021, they had this big crackdown, they banned it, right? But it was actually only briefly impacted in China. The hash rate went from 40% to 0%, and like a year later, it was back up to 20% again. They failed. The Chinese government failed to crack down on Bitcoin mining domestically. Black market crypto dealers continue to thrive and have for years in China. And bit by bit, we've had all these little stories coming out of China that, taken individually, are interesting, taken together are insane. First, they started taxing crypto late last year, that's big. Then they announced a state-run NFT platform, then a city-run metaverse, then multiple city-run metaverses, then that Hong Kong was going to be allowed to list crypto ETF products, then that Hong Kong could sell 16 different cryptocurrencies to retail traders, along with the plan that Hong Kong is to become a global epicenter, a global hub for cryptocurrency companies, and of course that Hong Kong banks would be forced to bank crypto companies, which is big news as well. And now we have this, a government-sponsored white paper, which basically says that crypto's here, crypto's cool, and we're building cool stuff along with the biggest companies in China. A China pump could be coming, and it'll be epic if it does. And of course, we always have to keep in mind, maybe it's all just smoke and there is no fire here, right? But keep in mind, the 2013 bull run was a big part due to China. The 2017 bull run was a big part due to China aping into ICOs and aping into BitConnect. The 2019 bear market rally was due to Chinese investors flocking into crypto so that they could ape into some Ponzi scheme. Also 2021, China was a major force until they banned it, and then the market collapsed by 50% because Chinese money left the market. And look, China and the 1.4 billion people, they could be getting ready to pump money back into crypto big time, so watch this space. Now let's talk about America. Oh, and one point, by the way, between China and America, it's quite funny, actually, to consider that China is opening up for crypto slowly but surely, and at the same time, the USA seems to be going the opposite direction, cracking down on crypto in an unprecedented fashion. Now, the American news. Unsurprisingly, the USA has once again raised its debt ceiling limit, because of course they did, they always do. Everyone thinking, they're not going to raise it, of course they're going to raise it. Now, this time it's by an estimated $4 trillion, which will keep the lights on for about another 2 years in America, but basically there is no limit to the US debt. The back of the napkin number they put up was $4 trillion, but it could actually be more. In theory, this is an unlimited cap, basically, for the next 2 years. Basically, spend as much as you want by 2025. And this just kicks the can down the road of the unpayable, unsupportable, insane US debt. 2025 is when they'll run into trouble again. We can have these debates once again, which basically aligns with my personal target, and what a lot of other people are saying too, that the next crypto market top probably coming early 2025. The markets have reacted positively to the news that the debt ceiling deal has been agreed upon, as that once again brings certainty back to the markets. We can get back to business as usual, just worrying about inflation and worrying about interest rate hikes. The usual stuff, right? I always find this whole thing a bit entertaining when the markets freak out over the debt ceiling thing. They always raise the debt ceiling, man, and it's always the same result. Party A and Party B do what the banks want. The tricky part of the debt equation, though, is that the US Treasury could issue anywhere from estimates of $700 billion to up to $1 trillion worth of new Treasury bills in the coming weeks, which, if dumped in the market, could cause a heck of a lot of chaos, because it may be difficult to find that many buyers for all of these new Treasury bills. So that's a bit of a wild card to watch out for. Maybe the money market funds absorb it, maybe the banks absorb it. definitely chances for all that stuff. And buyers will probably be found, right? But still, could suck up a lot of liquidity. But one day, the USA will have to pay the piper for all this insane debt, but not today, apparently. Now, before we talk about the Bitcoin charts, if you are a trader, then you need yourself an account over on BYBIT. They have the best futures trading in the crypto game, top spot altcoin markets, super popular copy trading services, and when you use the link down below in the description, start your account, you can claim up to $30,000 in trading bonuses, and for a limited time only, a free $1,000 BTC USDT trading position exclusively when using that link to start your account. Now let's look at some charts, and well, actually, I would like to start off with an Ethereum chart, but I do have some juicy Bitcoin charts for you because this Ethereum chart is nuts. It shows that Ethereum has basically been in down-only mode in terms of how much Ethereum is actually sitting on exchanges right now, currently around 17.8 million ETH. Now, the total supply of Ethereum on exchanges has basically just almost dropped by a half since the COVID sell-off peak supply inflow. Much more Ethereum has left exchanges than Bitcoin. And the trend, it's really just going in one direction. At the same time, we have ETH now being deflationary by a couple of percent per year and all the rest of the crazy stuff happening in ETH land. Now Bitcoin. First, let's discuss the 50-day EMA cross that just happened. So we had a daily confirmation of a candle above the yellow line, which is the 50-day EMA on this chart here. The price of Bitcoin at the time I recorded this video was a little over $28,000, which resulted in a nice, fat, juicy green candle right over that yellow line. Now, the 50-day EMA key moving average for these shorter term moves, of potential breakout moves. The last time we had a strong breakout over the 50-day EMA, we saw Bitcoin rally by 40%. Not saying, of course, that's what's going to happen this time, but it is definitely noteworthy. Everything, of course, depends on how the stock market really behaves this week around the debt deal. Is the debt ceiling deal going to be looked at very positively by the stock market? Likely, right? Will the deal fall apart at the last second? Always possible. Next, I want to pull your attention over to this. We finally got our MACD bull cross on the daily charts. Remember last week we had this like 11th hour rejection on the MACD. It was like super close to confirming, then blammo. Well, the debt deal got done, the markets pumped, and the MACD confirmed that bullish crossover. Now, last time we had a bull cross on the MACD daily was at the same time that we got that 50-day EMA crossover. And yes, there was about a 40% rally for Bitcoin after that bull cross confirmed on the MACD. The thing to watch now is to cross over that orange downtrend line you see at the top of the chart here and to put in a new higher high price, which means conquering $30,000, running it up again from there. So we'll be watching Bitcoin in the coming days to see how that performs and if, of course, we can get that momentum building up behind the debt ceiling news, behind the China news. These two narratives alone can really make things go crazy. And of course, we have to watch for the Fed and the inflation and all that stuff to see how things are going to play out for the rest of the summer. Okay, that's it. Subscribe now. I'll see you next time.